All right, guys, here we go. January 2nd, 2023. We wanted to be the first out with the news. We want to be the first to tell you absolutely Bitcoin will be going to zero on February 1st, 2023. And the DXY, the US dollar currency index, is going to start their super cycle. And we know this because it's on the chart, man. We got the drawings here, we got it written out. But whoa. Mark your calendar, Bitcoin to zero in December of 2022. Yeah, Bitcoin will be going to zero by the end of September. Get out now. Oh man. Bitcoin's still going to zero on in July of 2022. Man, I'm glad they were telling us Bitcoin to zero by July 1st. Chance 100%. Then for you gold bugs, check this out. Man, I'm glad I found this. Here we go. Here we go. Sorry, goat owners. It is over. After this run up, we're going to take a parabolic move to the downside. I guess that's also going to include silver. So silver's going, to zero probably, and Bitcoin gold is going to make a dramatic fall to the low side as well. Well, guys, obviously, this was kind of a joke. But seriously, this account, I don't know how serious they are. I mean, they look like they're putting in a little bit of work here, but I think it's just all hypothetical, maybe clickbait, like this video. But how many of these things do you see on the interweb? Uh, Twitter, the YouTube, whatever. There's all kinds of stuff out there. That's why I say all that to say this and show you this that tell you need to get yourself educated at some level, fundamental level of reading the charts, understanding trends, uptrend, downtrend, consolidation. I mean, there's only three ways the market's going to go. Okay, so if it weren't, I mean, I couldn't do this stuff. I mean, it's simple what we do. It's just not easy until the little bit of the tricks. But let's go ahead and delve into the charts, and I'll make it worth your time clicking on this. Okay, first of all, let's look at Bitcoin here. Okay, this is the monthly chart. This is far back as the chart goes, for us. But anyways, you can see the main takeaway of this I want you to see is that after a consolidation zone, Bitcoin breaks out. Okay, now when an asset doesn't matter if it's Bitcoin, gold, silver, the dollar, stocks, Apple, Netflix, whatever. After a consolidation, it's either accumulation or distribution. Okay. The big money's coming in, they're selling slow because if they dumped all their shares or all their coins or all their, metals at once, it would, dramatically move the price to the downside. Same with, buying or accumulating. It would, push it up too hard, too fast, and they couldn't get the deals that they want. But let's talk about Bitcoin. As you can see, all these consolidation zones breakout, consolidation breakout. That's number one I want you to see. Number two are the new all-time highs, new all-time highs, new all-time highs. Okay. And then what both of these things have in common, Bitcoin is never, after a breakout to the upside, it has never come back down and took that upside out or a new high out once they pull back. Okay, like this all-time high here. Also, we pulled back pretty deep and for a very long extended period of time. Broke out, but we never came back down through it. Okay, now this present day right here, obviously, and what we're looking at is this high pivot going back to 2017. And, we're at, it's at 13,880 bucks. Okay. And what we're looking at here is, yeah, Bitcoin is flirting. I mean, we could drop to that level, but so far in the history, not disclaimer, not that it couldn't happen again. I mean, couldn't happen for the first time, is that we never come down and taking that all-time high out, or traded under it, or even a consolidation zone. Okay, so that's what I want to point out here. That may be our, we'll watch. That's going to be very, very interesting. And then at this green dash line, our Patreon members know what that is. That's a very, very important measured move. And historically, uh, you know, has an 83, 87%, depending on if you have two or more um, factors going in with it of success. So we will see if that plays out. So anyway, wanted to show you this regarding the chances of Bitcoin going to zero, unless there's some major anomaly, black flag or something, black swan event. Um, yeah, we really don't see that happening. And then let's take a look at the SPY. And the reason why we want to take a look at the SPY is that no matter what people say, the markets never ever crash and burn, collapse, end of the world, breakdown, anything else before it lets you know, okay? There's always, cracks in the dam, leaks in the dam before the dam, finally breaks. And even going back here to, 2018, 19, leading up to the COVID slam down, we were in this ascending wedge formation. Also, we were getting extended above the 20. People don't realize it, but the 20 and the 200, in my opinion, I could prove it a million times over anyway, but that's for another video, are the two most important moving averages on your chart. And if you go back and look, nothing really happens, uh, until price action gets in and around the 20, and then that's when the party starts, or is that when the part or end, and that's when the party ends. But anyway, when you get far, price gets far and away from the 20, it doesn't matter if it's a 2 minute chart, hourly chart, daily, weekly, monthly, whatever, price will consolidate sideways and come down, or it will come directly down and allow the 20 to come up and meet it. Okay. So anyway, here we are. We were getting far and away from the 20, and then we were in this ascending wedge formation. So hence, that we were going to, possibly have a big fallout there. And then also, most recently, here we are again. And then when you start trading under the 20, especially on the weekly, it's kind of a nail in the coffin, even for obviously for Bitcoin too. But that's another little technique we use. And then we're making high, lower high, lower high, lower high, and then right through here, uh, high percentage of the times when an asset, doesn't matter what it is, and it doesn't matter what timeline you're on, hits a resistance zone or a trend line on the third hit, it'll move to the downside, or if price is coming down into it, it'll break on the third or fourth time, or I mean the fourth or fifth time break. Okay, so we'll see if we'll run rejection on the third, and then the fourth or fifth higher opportunity, higher odds to break back up through that trend line, retest it, and then continue. Okay, so that's the main things I wanted to point out. When you read things, and don't get freaked out. You need to come up with your own bias, your own by research. You need to know the charts, know simple techniques. Just well, just knowing a few things could definitely help people long range with their 401ks, 203bs. I mean, did anybody, please put in the comments, if anybody received a phone call from their alleged financial experts and in institutions, the guy at the in the strip center has a shingle hung out that he'll take care of your investments. I mean, did any of those guys call you up and tell you, hey, we might start needing to scale out of this market the beginning of last year, over a year ago? Or did they say just dollar cost average down, and we'll try to pick out the bottom? Matter of fact, let me give you a little bonus here. Three main ways, and there's one that's the best. Three main ways markets correct, and you can find the bottom. Number one is a V-shaped recovery. Number two, which is the strongest and best, doesn't matter again if you're on a 2 minute chart, 5-minute chart, weekly, daily, whatever. This is W formation, low, higher, low, and go. And then there's some caveat to that will pretty much guarantee it. Get you into the high 80% percentile that the market is correcting back up to the upside. And then the other way is that this big, down. It doesn't go, markets don't go down as you can see in a straight line. But anyway, it's just for quickness of the video here. You have a big downdraft here in the market, whatever it may be, even a stock, and then you'll trade somewhat sideways. It seems forever, and then once memory is lost to this pain over here, then the market will start going back up. And then also kind of a caveat to that is a little what we used to call fry pan bottom. We have a rounding bottom. You break the top there and then you take off. And let me see. Yeah, here we go. I wanted to show an example of that. Here's gold. Here's that fry pan bottom. And then, the potential, breakout when you get to the top of the and or in this case, we believe this is ended up going because it hadn't broke out yet, so we can't call it, but because you got to have confirmation first. But cup and handle, so cup handle, and then back old school guys used to call this formation just a fry pan bottom when you broke out the top. You could do a measured move from the low pivot here to the lid of the pot, and then when it broke out, you could extend that up, and it was pretty accurate, to be honest with you. But gold, that move is high 2,000 into $3,000 gold, but disclaimer, nothing counts until we get this breakout here. Let me see. This potential handle if it can break out up here. So what's the high? 1950? Yeah, 1950 to 2000. I'd say 1950 should be the breakout point I would like to see to increase the odds, probability that we'll hit that 3,000, plus go. All right, guys, thanks for hanging in there. Thanks for playing along with the joke at the first of the video, and we will see you on the charts.